Selecting and implementing the right technology for investment management is a major decision with a significant impact on cost and operational efficiency of a firm. Whether it's a hedge fund or an asset manager, understanding the various cost components is essential for making informed choices and maximizing the return on an investment in technology. On one hand, there's the build versus buy puzzle. Developing a proprietary system in-house could help to save costs in the long run. Portfolio managers, traders, and senior management have specific needs that are often time-sensitive. Prop systems allow for the fixed costs of resources like personnel and hardware to be directed towards customizations. Prop systems come with a high upfront investment in talent, time, and technology, along with ongoing maintenance and upgrade costs. On the other hand, purchasing an off-the-shelf solution from a vendor can be quicker to implement with lower initial costs. A firm also benefits from the vendor's expertise with similar customers and ongoing external support for day-to-day needs. But vendors have a contractual lock-in, recurring usage fees, and limitations in customization. When evaluating vendor solutions, I've found several factors that should be considered. To start with, there are good things and bad things about system maturity and functionality. A long-standing system is likely to offer a richer feature set refined over time based on customer feedback. Look at the system's creation date and customer base to gauge its maturity and support capabilities. The bad part is that modifications to a legacy system can be problematic. Then, a firm should look for a minimum level of integration capabilities. The system should seamlessly integrate with the existing infrastructure, including market data providers, execution venues, and other third-party services. Consider the costs associated with API connections and data integration. Scalability comes into play for strategic portfolio growth expectations. A firm should select a system that can handle current and, as much as can be expected, future needs. Factor in potential costs associated with increased data volume, transaction processing, and user licenses. Portfolio compliance features ensure the system meets investors' requirements for asset allocation. Compliance features like automated checks and reporting can add to the overall cost. Then there's the issue of feature customizations. Evaluate the level of customization available for client reporting, dashboards, and user interfaces. Bespoke solutions for high-touch assets can significantly impact costs. Beyond the initial costs of SaaS licensing, there are additional ongoing costs to consider. Using real-time market data, specialized news feeds, and market event or transaction analytics from third-party providers comes with recurring costs. People use systems, so systems need to be implemented and people need to be trained. This involves setting up the system, integrating it with existing infrastructure, and training your staff on how to use it effectively. Also to be considered is maintenance and platform upgrades. Regular maintenance, bug fixes, and feature updates are essential for keeping the system running smoothly and staying competitive. Vendors typically charge annual fees or subscription costs for these services, though the cost is likely embedded in the license fee. To effectively budget for these expenses, consider developing a roadmap that outlines planned features. Allocate a percentage of growth-related expenditures to technology, factoring in industry standards, company strategy, and potential efficiency gains. One final concern is scope creep. Uncontrolled expansion of features can lead to delays, cost overruns, and project failures. Firms should implement a change control process to evaluate the impact of any changes and ensure they align with roadmap goals and the existing budget. Carefully considering these factors and developing a comprehensive cost-benefit analysis can help to make informed decisions about selecting and implementing investment management technology that optimizes operational efficiency and supports long-term growth. See BizTT.com for more on investment management software as a service technology.